the end of the year, one of which Pete McGuire, our next guest from XM.com, was at in Vienna. Special observer status and especially live for you now. Peter, how do we end the year? Dust settling on two meetings, so they agreed once, then they came back to carve up the detail on a production kind of ceasefire. Has it held, or is it too soon to tell?
Well, good afternoon, Carson. A couple of things when you're thinking about this time of year. We've got the squaring of positions. We've got the hedge funds with record long positions, which, putting your mind back, going to around about 4 or 5 weeks ago, it's nearly doubled as far as those open positions, Carson. So the hedge funds, all of the money managers are very long. You've got a I think it'll be a very quiet week leading in for the next couple of days, and then next week I don't think it'll be a lot of trade in the sense of price volatility. 52 for WTI, 55 for Brent. I'd say it'll stay around that sort of number unless you see something dramatic happen. So moving forward into 17, I think it's going to be quite a fascinating couple of months. If compliance can stay on board and the non-OPEC and OPEC producers can stay at these levels, Carson, then you're going to see crude prices probably rally and ratchet up.
So even though that the greenback looks to be, you know, well anchored in the upward direction now, you would say there's no sort of demand destruction care of US dollar strength?
I don't think so, Carson. I think, you know, if looking at 2016, it's been a dramatic year. The first 6 months of the year, gold prices had their highest rise since 1979. Crude prices have doubled in the year. We've seen the Dow up nearly 20%. I was looking at some numbers, 19.6% since this time last year. So all the markets, US dollar has had, you know, incredible strength, and that's going to only, I think, appreciate further in 17 with Yellen at the wheel and probably a couple of rate rises. So it's going to be a very interesting point in time. It's going to be a very good time, I think, for traders, and 17 should be a cracker of a year.
Well, there's a call out from BK Asset Management that the A dollar is poised now for a move against the greenback to 71.50. So that would actually be music to reserve bagsiers, if nothing else.
Well, exactly. I think, you know, I don't think we're going to raise rates here in 17. I think it's you might see something in 18, but that's to the upside. But when we think about where the US dollar's going, and I think there's even more upside as far as Yellen's concerned, as I mentioned, and you're going to see further pressure. There could be every chance you could see a 69 to 70 handle for the Aussie over the next, you know, quarter. So that's going to take a little bit of pressure off the RBA, and in turn, I think it's going to be better for the overall economy as a whole.
Well, then again, iron ore prices, giddy heights to end the year on, but certainly even the government's view is that they pull back. We got that impression clearly from the release of MyEFO this week.
The government thinks that? Then they're probably not.
So, all right, well, there's the alternative view from David Hunt. Do you actually do the complete opposite to what... I mean, and you've got Foreman for doing that.
I love doing that with Goldman Sachs calls too. They're fantastic as well.
Well, I mean, on growth, they've got it completely wrong so far. So, yes, about 1% out. Peter, how would you handle that one?
Well, I think there's going to be an oversupply as far as ore in a lot of ways. You're looking at Vale, Carson. They've just they're ready to start this time next month. They'll be the largest mine in the world. We've got a 30-year life expectancy for SD or SIID. It's got $7, I think, is the magic number that Vale will produce at, which is down 41% from its normal production costs. And in turn, this is going to add more supply to the market. I wouldn't be surprised to see a weakening across the ore sector. We've just got to see what China's doing, but more production coming online is certainly going to probably put a handbrake as far as price.
Well, hopefully clear those stockpiles, because there was a chilling fall just yesterday, recall, about, what, it was about a 4% sell down, 4 or 5% sell down, running at 2-year highs, it seemed, the stockpile port story in China.
Yeah, exactly right. I mean, you know, they're buying reasonably well. We've seen that. I mean, and you look at copper, you look at the other base metals. So taking all of those on board, I think you're going to see more production coming up. I mean, we're producing at record levels, more production coming from Vale, and in turn, other markets possibly taking up some of the slack. You may see the Indian market, you may see China just warehouse more. So it's going to be interesting, again, as far as US dollar terms and where the producers play.
Peter, it's Adam from Shaw's. What's your thoughts? I mean, we've had some of these bigger bulk commodities, iron ore, coal, all these start to run pretty hard.
Yeah.
What's the next one? What's coming up in 2017?
Well, I think you've seen crude also, Adam. Tack onto that. Gold's been sold off. You've saw silver up. It's had a very nice rally. I think it's going to be some of the soft commodities. As far as the base metals, keep an eye certainly on copper, though it's back to where it was this time last month. So, we had that nice Trump rally. Yeah. Let's see what Mr. Trump does. Let's see what infrastructure spend's going to do, steel production, and, of course, consumption patterns. That's going to be the big growth engine, though I put my mind across to where the Swiss National Bank is. They've got some certain worries as far as what's happening in the Eurozone, very, very mature economies and what's moving forward there. So there's a little bit of uncertainty. I wouldn't be surprised for gold to make another trend higher, but you're going to have to worry where the US dollar trades. So,
it's interesting. Well, the business climate in Germany, the index there, the IFO report, I mean, that's only strengthening.
Yeah.
Almost counterintuitively, because you've got elections coming down, September for Merkel.
Well, exactly. And then you're thinking about what happens with Spain, Netherlands. We saw what happened in Austria only last week, or 2 weekends ago. So there is a degree of uncertainty. The contrarian view would have to be hold some gold because, things are too rosy. So that could be a trade. Base metals, keep an eye on them. And, of course, the wheat market, as I've mentioned over the last month and a half. I think there's more upside for that.
And one outrageous prediction to kind of steal from another shop's approach. One outrageous, just one.
Well, I think probably the ag sector. I mean, I just don't think the crude market's going to be a $65 trade, Carson. I don't think gold's going to go back to $13.50. So I'd keep an eye probably on the wheat sector and, of course, the other agricultural markets.
So no lithium. No cobalt. I mean,
So 2016.
What
about coffee?
What about coffee?
What about coffee? Come down about 21% in a month.
Coffee's had a big washout.
Big run up though, hadn't it?
Yeah, I mean, those markets have, they're very volatile by nature, and when you see them, wash out 21%, they can quite easily rally up another 5 or 10% in a short covering. I think that there's probably a little bit more softness for that market. I'd be looking at the ag sector. I think food's a big play. And moving forward, I look at those base metals and I look at the rare earths, but they're difficult to trade. And, of course, if you're looking at liquidity, that's a big concern for any trader.
And what about the one that Jim Rogers always carries around in his top pocket?
The sugar?
Yep.
Well, I think there's probably, that's going to, again, be more volatility over the coming year. I look at the market. I'm very conscious of what they're doing. Sugar demand, of course, out of India and so on. But I think just keep a close eye on it. We'll cover that one in the first couple of weeks at 2017.
And season's greetings to you, Pete.
Thank you, Carson.
As always, thanks for your contribution this year. Value that. Pete McGuire from XM.com.